The team here, we built a team that will help us enable us to scale. We have teams from DoubleClick, Yahoo, AOL, et cetera, all the kind of the major media players. We're exiting the year with about $100 million run rate. We've had about 150% CAGR since inception in early 2008, and we think we're just really at the very beginning of the growth story for digital advertising, and we've become kind of a key player in this space.
The byproduct of taking that 150 people down to 125, either by using it for capacity for organic growth or attriting those resources, is you take a $10 million business with $1 million in EBITDA, and you create a $10 million business with $2 million or 20% EBITDA. And the math is that simple. And that's not to say that it's simple to migrate the business, to integrate the business, or to create a common culture across those acquired enterprises. But the math has to work as a starting point, and you've got to execute properly as an ending point. And we think we've done that. And these two charts are revenue on your left and EBITDA on your right, and they chart quarter by quarter growth since 2009. So we're very, very proud of our growth, but one of the most significant things that we're striving to accomplish and that we think we're succeeding at isn't just the revenue and the EBITDA growth that might be relative to our acquisition strategy. It's the margin expansion that's relative to the strength of our platform, the efficiency of our technology, and the workflow processes that we have in place. In the fourth quarter of 2010, we produced an 11% margin. In the fourth quarter of 2011, we're going to produce a 15% margin. And we still have several businesses that are in different stages of migration. So we think that climb from 15 to 20 and higher is right within our grasp.
110,000 plus orders per month, so pretty nice volume increase. We're up about 100% over two years ago. And as I noted, we have about 75 customers that I'll show you in a moment. We were founded in 2003 with 75 employees in Atlanta, Georgia. About 40% of our people are in Atlanta, Georgia, 60% in Vero. Probably the most interesting number here is the 75 plus employees. In 2009, we had 75 employees, and in 2010, we had 75, and in 2011, and we will double our revenue between 2009 and 2011 with the same number of employees, illuminating that we have a pretty awesome platform, and the scalability of it is incredible. We're profitable. We did 21 million in revenue in 2009. We did 31 in 2010, and we should be close to 40 in 2011. And the great news about 2010 is that in 2010 and 2011 is we put some new initiatives and some new products out, and they're really hitting the last part of this year. So we're going into 2012 with a very predictable revenue base that should skew even higher than our growth that we've already had. So the business is doing super there. Funded by Safeguard. JP Morgan has a venture arm, Constellation Ventures, that came in 2005. And then we had a great group of angels that helped us out in 2004 and 2005. And Pat Welsh is one of the gentlemen who's on our board and also is an angel investor. This is not a Welsh Carson investment.